What is up, guys? It is Caruso FX here with another trade breakdown video. Now, this was a USDCHF buy that was called and taken live on the Phoenix Trading, live trading and Signal Telegram group last Friday. So that was the beginning of February. Now, this trade lined up with what I call a flip zone. So in this video, I'm going to break down the trade that I took live, and then I'm going to also give you guys a free trade idea that I'm looking to take. Same continuation of the same move. And I'm also going to break down what a flip zone is. So what I noticed on USDCHF, we were making significant lows. We broke a very significant point of structure. Now I highlighted with a green arrow here, red arrow here, and then the green arrow here. What was significant about this zone is that it was the last support turned resistance before the trend flipped. Now this is what a flip zone is. So you have a support. That support breaks. It tries to hold as resistance, not once, but twice. And then on the third touch, it ends up breaking. So now you broke. This is also recognized as your BOS, your break of structure. This is where bearish market structure breaks. And what you're looking at was what you used to be looking at as resistance, you're now looking to flip over as support, hence the word flip zone. Trend also flipped in this zone, structure also flipped. So you went from support to resistance back over to support. So even just highlighting your overall trend, again, price is making lower lows, you have lower highs in a bearish trend. So this was your significant area of support that if it broke to the upside, your trend was flipping to bullish. So to see that area break, then we had a shark fin hidden divergence with the 50, which actually was a very nice sell. We can also look into that because that was a really nice sell. It was at an area of structure. It actually came slightly through the 50 moving average. Nothing wrong with that, but you want to look at why did it come a bit higher? And the trend line we know is subjective and we can move it around a little bit. But it actually came to an area that you could have taken a perfect entry off of, and I want to show you why. This is a valid trade setup right here. I'm not saying I had the perfect trend line. I'm just looking, I lined that trend line up afterwards. But what happened here, because this was a little bit above the daily 50, but now we do this, and you have a precise entry point given to you by your Bollinger Bands. So we know this is a valid trade setup. A divergence at the 2.0 Bollinger Band is a valid setup. And in a normal scenario, you take that right to the 50 moving average. And if you want to follow the anatomy of a Bollinger Band trade, it goes as follows. You have 3 steps. Now, this is going to be a quick lesson in Bollinger Band trades. Your first thing that you need to happen is a failed shark fin in the steep Bollinger Bands. We got that. Then you're going to notice that your bands went from steep to very wide. That is your second step. Then the bands start to flatten out and price touches the 2.0 band. What has to be present is divergence must be present when the 2.0 band is touched for the entry to be valid. So you have step 1, shark fin, steep Bollinger Bands. It happened. It failed. Again, you want the shark fin to fail. It essentially will play out for 1 or 2 candles, inevitably fail because of it being against the trend. It's a breakout, steep Bollinger Bands, your typical failed shark fin scenario. Then your bands start to get really wide. Then your bands start to get flat. Price touches 2.0 band with divergence being present. Notice that once the shark fin happened, your shark fin is your highest point on the TDI. All of this price above that shark fin is all divergence. But how did you know not to get faked out here, not to get faked out here? How did you know to get in at the very top? Because your 2.0 Bollinger Band was there. And if you were a double entry trader like I am, your best method of entry would be one entry on the daily 50 with a stacked entry on the 4-hour 2.0 Bollinger Band. But that is how you would have caught the very top of that Bollinger Band move. And this trade, I actually went over it when I was doing my in-person boot camps, because somebody caught that sell following this exact strategy. And I let him know to exit at this spot, because you would not hold through a powerful flip zone like that. Because if a buy was going to happen, it was going to happen at this zone. And it made perfect sense. If we pull up our fib retracement, part of why I had the stop loss at this area was to give the 0.5 fib level an opportunity. So we had our structure point for entry. Now this is on our daily. So there's we have the fib level on the daily, 382 around the getting close to the entry, really highlighting that our stop loss is under the 0.5 in case it wants to react there. Main reason for entry is the structure point, which I highlighted with a box. I can actually get rid of that to clear things up for you guys. Then on the 4-hour, we also had, I'm gonna get rid of this now, help clear up the chart for you, take off the bands. We had a 4-hour shark fin that was just passing shark fin level. So it just nicked the edge. What made it significant was that it was happening at a flip zone. So daily and weekly were technically at this flip zone. If I go to the weekly, you can see that it almost makes like a the zone that I highlighted for entry, almost like a inverted head and shoulders type of pattern. Definitely not a complete one, but I'm just getting at, if you were calling this a shoulder, that's actually the same spot that we were looking to enter. And I do want to talk about the weekly has a technical divergence, not a shark fin divergence, but our weekly has a technical divergence, meaning that this can come all the way up to the weekly 50. Hence, I'm looking to continue the buy. But that was part of the confluence going for this trade. We have a technical weekly divergence. We have a daily flip zone with a daily fib level. I would not really have looked to buy this area if there wasn't the structure point to the left. It just made clear as day that if buys were going to happen, it was going to happen at that spot. We also had news that day. We had red folder news for the dollar. I believe it was NFP, February 2nd. I believe it was NFP was the news that was coming out. We had news. I got into the trade live, right? For my whole community. We got into the trade. News came out. It rocketed right up, right? Because we were playing off of a higher time frame area. Another quick lesson on news. News will often follow the higher time frame. So you'll see times where it looks like a strong buy is coming based on a daily time frame, a weekly time frame. And you'll notice that if news didn't line up with that move, it tends to still overpower. Your higher time frames are the single most important thing, really moving the market. And you'll notice just how often news will spike and end up going that way. So this trade, it went in our favor. The reason I didn't take an entry really heavy is because I entered about 1 hour before this high impact news was coming out. So I entered under the assumption that we might spike down and then go up, because I'm prepared. I'm prepared for that because I've seen it happen over and over again. If news would have supported sells, if news would have been bad for the dollar, we more than likely would have spiked down and then went up, and I would have just stacked another entry exactly halfway through. That way I could have got a bigger entry in. But instead we got this, and it took us straight to a 1 to 3, 1 to 4 risk to reward. Overall, that was the only trade that I took all of last week, right? And it just helps stress the importance of you don't need to take a ton of trades to make a decent living. You know, trading is a skill set where you can trade 2-3 trades a month, make 6, 7, 8%, and literally your work day is a couple hours, a couple days a week. You know, it's one of the most freeing career paths that you can do. And great if you have a family or plan on having a family and you want to see your kids grow up. Trading is what you want to get into. Now, we expected this move to come all the way up to the highs like it did. And what we're waiting for now is a nice retest of the structure that it broke and never retested. So we have a 4-hour 50, which is now, because I sent this a day or two ago, our 50 MA is starting to trail higher. Our daily 50 is also starting to turn around. So when I'm looking on the daily, this is the trade idea that I'm giving out to you guys. I'm looking for the retest of the 4-hour 50 and the daily 50. The lineup is going to be obviously staggered. They're not going to be right on top of each other. But depending where our 4-hour 50 lines up, depending where our daily 50 lines up, is obviously going to slightly change where the entry 1 and entry 2 will end up being. It all depends how soon this is going to pull back. And the idea would be to take it from the 4-hour / daily 50 all the way up to we have our 4-hour 800 right here, which we would obviously want to be out. And we also have a psychological level, 0.88000. That was why I picked this take profit right underneath the psychological quarterly level. And I wanted to be out before the daily 200. I wanted to be out before the weekly 50 is, I think, still. It is still loading. There it is. Yep, wanted to be out definitely before the weekly 50, before the daily 200, or at least ride this up to the daily 200. But this trade is also set at a 1-4 risk to reward. So overall, if this trade happens this week or next week, we would get a total of plus 8R between two trades. Plus 8R. Which again, I don't really take a lot of trades. I just make the trades I take actually count and hold down the wins. And a quick lesson on psychology, don't give your profits back to the market. Make the money, hold it down until you get to your next trade that's going to make you more money. That means you have to avoid some of those extra trades that don't look great or half, iffy trades. Don't even bother taking them. It's better to take no trade and hold your account balance down right where it's at than it is to take more losses and chip away at your hard-earned wins. So that was the trade. This is exactly as it was drawn up, a 35 pip stop loss. Exactly how it was drawn up and taking live for my community. And remember, I'm gonna post the link to the free Telegram group in the description of this video. That way you can join the free group. There'll be a link to join the live trading and signals group, which is a paid Telegram group. I do trade live every single morning for 2 hours from New York Open. And the session usually runs for about an hour and a half or 2 hours. And if I see trades, I'll take them live, right? I'll call out trades. I'll give chart feedback. People will bring up pairs that they're looking at, and we'll take a look at it together. So that is what I am offering. Now, feel free if you found this video helpful. And also, if you have any suggestions for future videos, I'm looking to make several more in the next week or two. So Bollinger Bands is a topic that's come up over and over again. Bollinger Bands, backtesting, and news trading. So I'll continue to do trade breakdowns. And similar to how this trade breakdown had flip zones was kind of the highlight of this trade breakdown because the entry was a flip zone. I'll really specifically try to include some trade breakdowns that have Bollinger Bands involved or that have news trading specifically involved. However, now that I'm looking at this, I do just want to point out, if you go about 8 months back on my YouTube channel, I have a USDCHF Buy, right? That is this over here. The trade breakdown is on this YouTube channel. I just realized this was the USDCHF buy that I did a breakdown for, and that I also took live for my trading community last year. Funny how that exact level turned into the trade. It was actually, they were both buys off the same exact level, but they're like 6 or 8 months apart. But I just looked at that and I was like, wait a second, that little shark fin divergence on the daily looked familiar. Yeah, that was a trade from back in July, and this is February. Crazy with swing trading just how significant certain levels are. But that was a trade breakdown on YouTube, and this is a trade breakdown on YouTube. Just a funny thing that I picked up. So please let me know in the comments how this video helped you, if it helped you. And also, if you have any other suggestions, drop them in the comments below. Thank you guys for watching, and stay tuned. Subscribe if you want to get notified when the next video comes out. Thank you guys. I will see you soon.